righty, what's up, Stocktwits Nation? I am not Katy Perry. I am Tom Bruni, editor-in-chief of Stocktwits. I'm here with Shay, a co-host as usual. We've got Michael Parekh, the AI whisperer. We've got a special guest, Sean Emory from Avery & Co. I've known Sean a while through FinTwit. Finally got to meet him last week, and he had put out a tweet saying, hey, who wants to talk about Tesla ahead of earnings? And I was like, this is the perfect venue to do it. So we've got a lot to discuss. I know we framed this as a debate, but we're going to keep it, no cage match style here. We'll keep it friendly, and we'll get into it. So, guys, why don't we go around the horn real quick? Sean, why don't you start with yourself? Why don't you introduce yourself, let people know what you do, what you're known for, and a quick overview on kind of how you feel about Tesla, and then we'll go with Michael and Shay after.
Cool. Yeah, no, thanks for having me, guys. Glad to be on the show. Sean Emory, I got to see Tom last week, so that was cool. In New York. Avery & Company, founded it a decade ago now. We're an asset manager in Miami. Investing where the world is headed is kind of our MO, so Tesla is, somewhere in that lane to some degree. And, our views on Tesla is, great company, great product. Lots to talk about in terms of, what they're building and expanding into. People call it optionality. Some of that optionality is real today. And, our view is, what's the valuation relative to that optionality? So, that's kind of our take.
Nice. And Michael Parekh, how about you? I know you and Shay have some opposing views on kind of the robotaxi side and who's going to win. So excited to hear about that. But how do you feel overall about Tesla?
I've been on record on this and other shows that Tesla for a long time is the mother of all meme stocks, and that continues. I'm a fundamental analyst at heart. Look, the trends work until it doesn't. The fundamentals don't matter until they do. And right now, you've got a world that is awash in liquidity and is looking for ways to invest in some of the biggest themes in AI and technology. There are very few things publicly to be done. People are very excited about automated robo-taxis. They're very excited about humanoid robots. I think those are all wonderful things. I write about them daily on my Substack, and these are things as a fundamental analyst I'm very excited about. However, as a technology analyst for over 30 years, technology always takes longer than people think. And investors get very excited always earlier than the reality. And as a result, you have to watch the financial ebbs and flows, both on the private and public markets. In this case, right now, in Tesla, the market's way ahead of its skis in terms of anticipating when we're going to see these rewards. And Tesla right now is benefiting from all of this with $1 trillion market cap relative to the Mag 7s. To me, it's still the fundamentally most overvalued Mag 7 out there, and we'll get into it. And by the way, I think their product is also lagging relative to other EVs, not just on auto driving, but in the quality of their product, especially as you start to see what's happening in China, which is the one thing that we ought to be watching, specifically as an analyst. China is the biggest auto market in the world, and they are so ahead of everything we're doing in EVs and autos and self-driving. And most people here are not even focused on that. And it doesn't matter until it does. So I'll stop there, but hopefully that gives you a sense of where I'm coming from on this.
Yeah, absolutely. Tesla and meme stock. I think we found our resident bear for the debate, and we'll pass it over to Shay. Shay, Future equities. You guys are focused on, growth and what the future looks like. What are your thoughts on Tesla?
I mean, Michael said some very valid points. I think the one is he's a fundamental investor. There's always different types of investors. If you're a fundamental investor, you will cry if you look at Tesla stock right now. Like, it does not make sense. However, if you're a growth investor and you're all about capitalizing on the early disruptors and secular growth themes, this $1 trillion bet is something that is, but if they solve what Elon's trying to solve on physical AI, which in my opinion is the greatest TAM in mankind history, $1 trillion is going to be nothing, but there is an Elon premium. Always is on Tesla stock. And right now, like, if you want to exclude all that AI software part of their business, like, it's only a $150 billion business with their automotive and energy storage. That's all it is. So right now, being at $1 trillion, there's a pretty big premium. But if you look at the private markets, like Perplexity is about to, not Perplexity, I think it's Anthropic, about to raise $100 billion. I think the most private rounds. Like, there is, fundamentals are taking a back seat right now in this AI race on these companies because in our opinion at Futurum, we do believe there's an infinite demand curve for AI. It's not going to be a type of like a product release and everyone's going to start came out and it's going to be latest and greatest. Like AI is going to be an essential component of everyone's life forever now. So there's going to be somewhat of an infinite demand curve that needs to be factored into these early disruptors. And nobody in the world is trying to tackle AI on the hardware and software side like Tesla is. It's a moonshot. However, if you look at Elon's track history, he shoots 100%. So if he does solve that, it's almost too not erratic. It's too detrimental to bet that he's not going to than he is and miss out on this opportunity. But there's opportunity costs at play. Like it hasn't moved in 4 or 5 years. I got into Tesla very late 2 years ago. So like I am a newbie with the Tesla stock, but I think it's one of those names where you can only pick on choose how many companies on one hand that have not moved in the past 5 years. Tesla's one of those who might be an early disruptor in these growth themes that really hasn't ran yet. So it's worth the risk, in my opinion.
All right, so we've got our general optimist, we've got our general pessimist, and then we've got Sean, who's playing both sides of the aisle, depending on the topic.
To agree.
Yeah, exactly. All right. We got a good group here. I think the best way to tee this off, we've got Tesla reporting earnings next Wednesday, I believe, after the bell. Keith, why don't you pull up the year-to-date performance chart of the Mag 7? I think this is, as Shay alluded to, depending on what time frame you're looking at for Tesla, it's been a frustrating few quarters, few years for shareholders. But long term, Tesla has obviously outperformed a lot of these, excluding NVIDIA. So we've got Tesla down 20-ish% year to date. We've got NVIDIA at the top, and then we've got, everyone in the middle. So we've got, Apple and Tesla down at the bottom. Heading into earnings next week, Keith, if you want to throw up the fundamental chart, throw around the F word here for you guys. We've got their revenues coming from automotive and then everything else that they do. So we're kind of at this place where automotive revenue is falling, and that's kind of the concern. And then we've got these other segments that are not at the point where they're generating significant revenues. Heading into earnings next week, what are you guys watching? What is going to matter for this stock in terms of its short-term price action?
No, I will let the others chime in first, but I do have some thoughts on the auto piece relative to expectations. So I'll come back in.
I do. Can you go back to the old slide real quick? I just want to make one quick comment. The difference between these Mag 7 names, the bottom two, they got kind of penalized for stuff that were out of their control. Apple with China, Tesla with EV credit removal. So there is a caveat on why they're underperforming. It's not as much a business execution, but I want to add that color, but I'm going to pass it to Sean so he can speak first on your question, Tom.
Yeah, I mean, you look at that chart, the two lowest growers there are Apple and Tesla, right? One's negative to some degree or flat, depending on what unit you're looking at. And then, Apple's been flat in terms of revenue for multiple years. And both trading at, premiums. You look at Meta, heading into the year was trading, sub 20 multiples. And I would say, they're, one of the leaders, and if not, increasing their leadership with AI. They have AI directly into embedded in their products. So, whatever spend they do on CapEx, in theory isn't wasteful. 3 billion people, across all their platforms. This isn't a meta debate by any stretch, but the, if you go to Tesla, what are people looking for? I think we're back to, 7 years ago where we're back to storytelling to some degree, which is, autonomous vehicles, they're going to come out, we're going to roll them out, blah, blah, blah. A lot of amazing things there. If you get into a Waymo, the experience is lovely. If you, then you look at, the humanoid, there's going to be a lot of humanoid talk. And then, what's going to happen on the energy space, which, has been kind of this, dark horse, on the, income statement for the last several years. That's, you've seen margins expand, you've seen revenue expand, pretty dramatically. I think that's going to slow down here in the next, several quarters. Where's going to be the uplift, for Tesla? So that's kind of like, it's back to storytelling, and it's whether the bulls that sit there and like the story, there's enough of them to essentially hold up the stock for time being. Last point, Shay could be right in terms of the idea of Tesla being great, but Cisco, people were right about it, but it took up until here recently for them to get back to their 1999 2000 highs. Microsoft peaked in 2000, and it took them 14, 15, 16 years to get back up to those highs. All important stuff as we think about future, but also valuation.
I think those are great points. If I could trouble you to put the Mag 7 chart up again, I think it's an important framing, because as investors we look at this stuff both in terms of absolute performance and relative performance. And on a relative basis, the Mag 7, we are in what I call the mainframe era of AI. Because to play in AI, you need massive amounts of compute. To have massive compute, you need massive energy. So every one of these companies, with the exception of Apple, is literally spending $50+ billion a quarter. So hundreds of billions of dollars a quarter year. Zuckerberg from Meta literally said a couple of days ago, he's now, with his redoubling and his AI talent wars that he's exacerbated over the last few weeks for the industry, that they're going to be spending hundreds of billions of dollars on AI. And when I look at this group of companies, the biggest beneficiary obviously is NVIDIA, which has been a core part of my portfolio for a long time. And NVIDIA continues to execute despite the headwinds from China on the political front. I had a big post on it a couple of days ago. Jensen got the permission to sell his chips into China, which I think is a short-term one step forward to the 2 steps back that the U.S. is taking on its battle with China. The reason I point out China is because China is very important for 3 of these companies, obviously, because they have investments in China on the ground. Apple is obviously the obvious one with huge infrastructure for making iPhones and all their computers and so on. NVIDIA obviously has a huge amount of presence in terms of sales, $10-15 billion. China is the biggest AI market outside the United States. China is also where half the researchers and AI talent is in the world. So all of these companies need to be there. And that also brings us to Tesla, which has one of its core gigafactories. The battery, everything is in China. So China is a big exposure for the whole industry. If I look at the Mag 7s, I've got a pair trade going on my side where I'm short Tesla and Microsoft, and I am long on the active side, Google and Apple. Apple, I think, is the least appreciated name on the AI side. Google is the one I think that has the best full stack position right now. Meta is very important to highlight here because as much as we talk about Elon, remember, don't forget Elon and Zuckerberg almost had a cage fight 2 years ago. They were doing this MMA thing, etc. In 25 and 26, these 2 companies are going to have a cage fight on AI capex. They're going to, if Zuckerberg is accelerating, which he is, spending $100 billion or more on AI infrastructure a year, guess what? Who's going to have to keep up? Elon. As wonderful as Elon is on executing on his fundamentals, that he's putting space rockets up there and Teslas, he's done extraordinary things as an entrepreneur. I give him that. The problem is he's the poorest one of these 7. Regardless of Elon being the, quote, richest man in the world, he is the poorest one. He does not have the cash to compete at the levels of any one of these companies. And so as a result, what are you seeing? 3-4 days ago, he's literally taking $2 of the $3 billion on SpaceX's balance sheet, private company, one of his biggest positions, to fund XAI, to build more AI data centers and buy more NVIDIA chips from Jensen. Literally, there's rumblings of him also tapping the bank at Tesla, which has $16+ billion in cash, to take some of that over to XAI. Now, if you're a believer in Elon, that's great. But as an investor, the only thing as a public investor, if I'm owning Tesla, and I don't have any stake in any of these other companies, guess what? I'm on the outside. There's something called fiduciary responsibility. And Elon, it works great for him to just mix and match and take things from here and put it there, etc. But it doesn't do well for shareholders. And why am I pointing this out? All of this is fine when all these charts are up and to the right. When there's a bull market, there's momentum, everyone is happy because everyone's along for the ride. You know, Microsoft is at the highest relative valuation in the Mag 7s right now, other than Tesla, at a 35+ valuation. And I can get to my bear case on Microsoft if you guys want later. But just since we're talking about Tesla, the Tesla piece is interesting because he does not have the tens of billions of dollars. He does not. He's going to have to raise it. And I would say OpenAI, which is not even in the Mag 7, has a better shot at raising tens of billions of dollars than Tesla does. How far behind he is on EVs. His auto driving is behind the technology stack. Everyone laughs at Waymo. If you want to do robotaxis, please just buy Google and Uber and do a pair trade against Elon on Tesla, because you're going to see the robotaxis on that side. Everyone just focuses on these YouTube videos of these cars driving themselves and so on and so forth. The tip of the iceberg in terms of robotaxis. To do robotaxis, you have to clean them. You have to manage the fleet. That's a whole different business. Guess what? That's what Uber can do with their infrastructure. Elon has this dream. He tells us, he's like, it's Tom Sawyer painting the fence. He tells you, oh yeah, if you buy a Tesla, it's going to go work for you while it's parked. You're in your office. It's going to pick up passengers and come back. And, I looked at the research. I went to New York City cab driver companies and LA cab driver companies. Most of those companies are personally owned. Those taxi drivers have to literally wash their cars every night. They spend an hour to 2 hours cleaning their cars. I went into one of them and I saw the crap that is in the car to be cleaned out. It's just so by the time you do the economics, if you say, okay, I'm going to have my Tesla Y or 3 being driven around all day and it comes back, guess what? My family is not going to, I'm not going to want to put my family in that car. It's going to be dirty. Either I'm going to spend 1 to 2 hours cleaning it, or I'm going to have to pay someone 10 to 20% or 30% of my revenue for the month on that car to clean that car every day. So no one thinks about the logistics.
That's where the humanoid.
I was going to say that the physical labor is going to get replaced in 10 years.
So now, so if you want to get onto the robots, I've done a huge amount of work with robots. We are so far away on the robots. The robots, it's going to take 20 years, and I can walk you through fundamentally why. It's not even clear that humanoid robots are going to be useful. I was an early investor in things like Roomba and so on. The most interesting robot we've got after 20 years are little vacuum cleaners in our homes. Okay,
yeah,
and that stock
delivery,
and that
right?
and the delivery robots. Okay, let's talk about them. Amazon, if you want to do robots, go invest in Amazon. Over 1 million industrial robots, the biggest installation of robots in the country outside of China. China has over 2.5 million moving industrial robots for warehouses. On the delivery side, Tom, that you're talking about, again, it's a fantasy. Amazon spent 8 years, billions of dollars trying to do delivery for pizza and all this other stuff. The logistics are not quite there. Yeah. So these are wonderful science fiction stories. They're going to work over time. We're going to be startled how different our visions are going to be to the reality when it happens, but we're not there. The market on the public side is being sold a future that's way over there, a mirage, and we're getting excited about it, and we're way overpaying it. Today, just to bring up the car chart that you had for Tesla, most fundamental sell-side analysts today, if you look at their research, the best ones, Adam Jonas, Morgan Stanley, etc., the car part of the Tesla business is worth less than $200 billion on fundamentals.
Yeah. Shay mentioned earlier, 150 billion. But, there's a lot of storytelling here. There's a lot to unpack based on what you said. Before we get too far off base, I think there's some breaking news I think Keith has got in the chat. Uber and Lucid Motors announce next-gen robotaxi partner program exclusively for the Uber platform. Uber is going to invest $300 million in the stock. So, again, this is a competitive space. It seems like Uber is making several bets across the EV space to take on Tesla. So again, I think the story that we're seeing here is getting a bit more challenging as more and more competitors come in. Shay, do you have any immediate reaction to this news, or does it kind of change your short-term view of Tesla and the story they're telling?
No, I mean, first off, I think I've been very adamant on this show that Uber is going to be doing this, essentially partnering up with everyone in the world outside of Tesla. And it makes sense because they don't own any IP. And what do you do to make sure you maintain your position in this race on autonomy? You leverage your network via partnerships. So I think you're going to see a lot of these kind of partnerships going forward on like every single company. Fine, Tesla, you don't want to use Uber's network. We're going to pull that lever because you won't. And Uber's going to be in a really great position. I think that the market's violently offsides on calling out for the demise of Uber business model for the next couple of years, like what Michael's saying. If it does happen, I don't think it's going to. They're going to figure out something along the way. But if it does happen, it's going to be decades away. I do believe it's going to be very important in the new digital economy to own your own IP and own your own data. You're seeing preliminary signs of that already with JP Morgan, like now charging fintech companies on their own customer data. You're seeing every hyperscaler want to vertically own their own AI stack. You're seeing Google with TPUs. You're seeing Amazon's a little different, but AWS is using Trainiums. Amazon doesn't really care about control. They're more the enablers, like what Michael's referencing on robotics. They are the robotics leader. They're leveraging their retail monopoly on capitalizing on all these future growth themes like drones, robots. They don't care about developing it in-house. They're allowing the retail, enabling them benefiting from the OPEX margin expansion opportunity rather than owning it fully, which I like, but also it's a lower ceiling, but it's fine. Way higher floor. You're seeing Tesla. Yes, it's very futuristic, but like they are following the same suit as Google on trying to vertically own their stack, where Dojo is like they're working towards Dojo. It's not there yet, but eventually they're going to, I think, have their own hardware side that's going to be hopefully training their XAI that's going to be merged with Tesla. That's another debate, but hopefully they merge together. They also have that consumer face with all their cars and data that they have in-house. And what's the other? Microsoft's, I don't know. We'll talk about Microsoft. I'm on the Michael's side of it. I'm kind of bearish, but also like it's hard to be bearish on what they have in the enterprise space. It's just, I think something's going to have to pull on that OpenAI Microsoft relationship. It can't be the middle ground like it's been. It's going to kind of diverse in one way or another, and it's a game of chicken, and you have to wait it out. Either way, going back to your point, Tom, for Uber, this makes a lot of sense. It doesn't penalize Tesla's autonomy moats because this is expected. Like what Tesla's trying to solve via autonomy is something that nobody else is solving. It's like really, I don't know. I'm trying to think about how you describe it. It's like Tesla's trying to solve autonomy like how a human would actually drive, if that makes sense. Like no more LiDARs. Like they're truly using the two lights as two eyes. It's very sci-fi. You're right. It's not there yet, Michael, but it might be there eventually. Either way, autonomy vision on Tesla, I'm like kind of skeptical on the timeline on that. It's mainly humanoids. Like if the humanoid component, which Michael, again, you're disagreeing with, but I think that there is going to be, we're experiencing multiple super cycles right now. And I think that physical AI is the next derivative of the digital AI. And when that does occur, there's so many benefits in the world that's going to cause. A perfect example is inflation. Everyone hates inflation. What's the biggest deflationary lever that can be pulled is automating all these warehouses to make the consumer goods cheaper because you don't have to pay for that labor. That's something I do believe that's going to get some kind of federal push to accelerate. And I don't know what that's going to mean for humanoids, but as soon as humanoids crosses that finish line, I can promise you every major player is going to buy thousands of humanoids to capitalize on the OPEX expansion. But timeline is always the biggest variable in that calculus on when that's going to happen.
Michael, I see you're teed up, but before we get into, I want to switch back to the long-term view in a second. I just want to close out with Sean on kind of the short-term outlook and earnings. You know, as Shay just mentioned, there's a lot of pieces of the puzzle that are kind of in progress. None of it is like complete. And so you're making a bet essentially that all of these different components will come together at some point in the future and kind of create this vertical stack that Tesla can own. So Sean, in your view, just to close out the earnings conversation, what is the story next week that the bulls or bears are looking for that will kind of get this stock to move? And does it almost matter less about the, actual numbers that they report? And is it more to do with the external factors of Elon and politics and China and all of that? So what do you think that, investors or yourself are looking for next week to kind of move the needle for the stock?
Yeah, I mean, a lot of good points, and I would love to, communicate, dialogue with, some of the other points that they were, referencing. But the, next week, again, like I said before, it's, we're back, 5-7 years ago where how many cars were delivered and sold matter much less today, because ultimately, even if you listen to sell side, analysts, a lot of the embedded value is sitting inside of autonomous. And, everything from, 50 to some saying 80% of the value is what is being attributed today. And so it all comes down to, what is he saying about where they are in autonomous? How did the Austin rollout go out? You're hearing things about Australia going on the internet now in terms of full self-driving there. And that's ultimately what people want to hear. Satisfaction, what's the, bigger push on rollouts, other states. I think those are the things that will move the needle higher. Also, the conversation on what he's doing in DC and, whether he's in or out. Probably people are going to ask him about, his new political party, and they probably won't ask him, right? Because they'll get ridiculed on the earnings call. So that probably won't come up. But those are important things, like where's his time being spent? And then also, what's the state of, autonomous? And ultimately, that's what matters, big picture. Auto gross margins, those things matter incrementally. But ultimately, look, the last year and a half, they've significantly underperformed in terms of, sales and deliveries. First half of this year, EV sales are up in the U.S. and they're down. So the market doesn't really care all that much about how many deliveries. It's about turning those cars on and making them full self-driving, and you either believe in that story or you think Waymo, which I think Waymo's in the driver's seat here, within that. But again, that's the short term. We can kick it back to the long term if you'd like, but I definitely have some comments on some of this stuff.
Yeah, why don't you kick off the conversation about kind of long term? Obviously valuation is kind of lofty, like you said. A big portion of the belief is in this story that bulls are telling, and so we get the opening bell. Let's check in real quick. We've got the market opening pretty flattish, so not much distracting from this conversation, which is good. So Sean, why don't you? Yeah, why don't we chat quickly about kind of your longer term view? Let's get. I'd love to hear kind of your perspective on. Obviously Shay and Michael are on very opposite ends of the spectrum of how this is going to play out. So what are your thoughts? How are you thinking about that from your perspective?
Yeah, look, we're fundamentally driven, so it's a gift and a curse, because sometimes you're trying to look far out and be rational in your views. But again, so you have the deliveries, right? That's plateaued here. I question how much more growth we'll see in terms of vehicle sales. Cybertruck, ended up being a dud. You check used car, prices of Cybertrucks, they're down 50%. That was supposed to be kind of the new unlock of, demand. So if they're not going to expand their fleet too much globally, obviously European sales are, getting crushed. China's going to be its own monster against them. 50% of Tesla sales or vehicles that are out there today come from California, and I don't think that's necessarily Tesla's friend these days. And so there's a lot of these nuances that I think matter to the bigger picture. So then the next question is, turning on the current vehicles. And we know, some of anything that's come out over the last 3 years have, some of the updated sensors. Anything before that actually doesn't. So some of those would have to be retrofitted, I believe, to actually be full self-driving. Musk has focused on humanoids and on vehicles, full self-driving of these general purpose, robots, let's say, where, again, I'll save the humanoids for something else. But, if you look at the fleet today, the way we ran the math was, okay, let's take Uber, let's take Lyft, let's take taxis. How many rides are they doing in a single year? Combined in the U.S. there, it's, 3 to 4 billion rides. Then you take that to someone like Tesla and you say, how many miles can a fleet run 24/7? There's peak times, and how many cars would you need? And we came up somewhere between 300 to 450,000 vehicles. Clearly they have the fleet out there to match that. This is nationally, right? So this is you have to get jurisdiction approval and federal approval and all these other things to be accepted across the country. But then you take the revenue per mile, and I'm getting a little wonky in terms of the numbers here, so it's mental math here. But there you say how many cars would you need, and then how much would it cost? And generally speaking, it would cost Tesla roughly $30 billion to build this fleet out. And then revenue per mile, is it $1? Is it 25 cents? Like some have put out there. That's not that much money. And ultimately, what you get out is 400,000 cars making about driving about 90 miles a day. That's them just max utilization, and you get a number that is 40, 50, 60 billion dollars in revenue. That's not $1 trillion market cap, and that's probably why you don't see it multiple $1 trillion in Google in terms of embedded in Waymo. So I think the Waymo investor is being somewhat rational, and the Tesla investor is not. So that's my take on Tesla, and then again there's energy storage and some of the others. But I'll leave it there and open it up for that view, which is it's not that big of an opportunity when you actually think about it from the car autonomous vehicles.
Yeah, Michael, great points all around, Sean. Let's stick with, humanoids aside, let's stick with the immediate issue, which is kind of the robo-taxi fleet and all that. Michael, from your perspective, how do you see what Sean just kind of laid out there?
Let's go back to fundamental principles here, because a number of things that are being tossed around, Shay mentioned autonomous, Tesla has the best autonomous. That's not correct. Tesla does not. The best, even Waymo is not the best autonomous. We are, there's a scale. You guys can research it. It's a level 5 scale of self-driving, L1 to L5. And we are at the best estimates around the world at level 2. Cars that can be driven with human supervision. Even in a Tesla today, a Model Y or 3, if you're driving the thing, it's going to beep at you because of what Sean mentioned. There are national and federal and state laws on permission on auto driving. The level 2 means that humans have to be behind the wheel and touch the wheel every few seconds. Otherwise, the thing stops. If you look at the Austin demo that Shay mentioned, that was a farce because those were 20 cars maximum where you had a Tesla representative in the right-hand seat. It was the same car that I can drive in my Model Y with the self-driving, but yet, because it's in a small radius of approved area that can drive Austin, they have a supervised driver, and it's the same car. No separate software, no separate auto software, which is being allowed to drive passengers in the backseat around Austin with the same level 2 driving. Okay, and why is this wonky stuff important? Is because everyone is assuming that this self-driving stuff is right around the corner. It's in the next 2 to 3 years. I'm talking level 5, which means you can drive, the cars can drive themselves on any road, in any weather, anywhere in the country. We have a huge country. You look at where even the Waymos are. They're in 7, 8 cities. They're partnered mostly with Uber. They're mostly in sunshine states. They're mostly in places where the traffic is mappable. These are essentially trams without the infrastructure on top of them. This is level 2 driving, and that's very important to understand from a bottom-up technology point of view. And yes, everyone knows, Shay mentioned, Elon for a long time ago said, okay, I'm just going to do self-driving with cameras, no LiDAR. So his cars have 8 or 9 cameras, okay? Compare that to Waymo, it's 40 or more sensors, most of the LiDAR, which is radar, which is, by the way, if I'm putting my life in a self-driving car today, okay, and you're telling me, oh, trust the Tesla versus the other one, this one has 8 sensors, that has 40, guess what? And same price, I'm going to pick the Waymo, okay? I mean, if I give you 2 computers and I'll tell you this one has 1/3 the processors of the other one, which one are you going to pick at the same price? Okay, this is human nature, and most people just assume, oh, it's Tesla because of Elon. It's not. It's a crappy product. Today, the Chinese are ahead on LiDAR. They have solid-state LiDAR chips, which, by the way, the U.S. companies have not yet caught up on because of all the trade curbs and so on. China is way ahead on LiDAR. What's going to happen is Elon at some point is going to have to acknowledge and take back his position on LiDAR. He's going to have to retrofit all his models with LiDAR sensors because the market is going to demand it, because that allows a whole additional layer of drivability to take it to level 3, level 4, level 5. When you look at autonomous driving from a technical point of view, what it needs to really do to provide the reality versus the dream, we are years away. We are years away. So yeah, I like that Uber announced a thing with Lucid. Uber is actually the best position because they know how to run a fleet. And by the way, this business of running cars so that they're going to make money for you, this business of fleet maintenance is a very important one. One of my former partners at Goldman ended up running Hertz for a couple of years, a few years ago. He did the largest bet of his career and he lost. He bought a whole bunch of Teslas for the Hertz fleet. You can look it up. They lost billions. One of the biggest issues was just the maintenance on these things, post the thing. This was not even auto-driving autonomous fleets. This is just, you can rent a Tesla in a Hertz. The maintenance part of self-driving cars is something that is not looked at all. And Elon has no solution for it. Uber, the drivers clean their fleet. They're getting 30% of the economics, so they're cleaning their fleets. They're like today's taxis. No, they don't.
Yeah,
but they will have to invest. They will have to invest in that. That's billions more than the 30 billion that you're talking about. Okay, so all these, billions here, billions there, it adds up to real money at some point, as they say. And on top of that, Elon also has to come up with 30 billion, Sean, to your argument, to do what you're talking about on the robotaxi side. But then he has to come up with 50 billion to come up with the AI data centers to compete with Meta, who is literally talking about 5 gigawatt data centers for Meta AI. Elon wants to compete on that. Elon has long forgotten automobiles. He's not sweating today necessarily about his earnings call on cars. If he talks about cars, it's going to be a couple of sentences. He's going to basically wave the flag around autonomy and robos and all this other stuff and robots, humanoids. These are all 10-year dreams. It's wonderful. I love him. I was a huge fan of Isaac Asimov and Robots and I, Robot. And go watch the movie, read the books. It's so many years away from now. The Jetsons, everything. And the reality, the fundamentals don't match. And the investments required at every level of this are in the billions. And so then look at the balance sheet, not just of Tesla, but all of Elon's companies together, the private and public ones. And just think about that relative to the Mag 7 chart and their balance sheets. Meta just announced this for the first time. They're going to raise 25 to 30 billion dollars in debt for the first time. Remember, this is a company that's got $100 billion cash flow, right? And they're going to go into debt. I mean, you think Tesla and SpaceX and anything that Elon has the ability to raise that kind of debt for all these investments we're talking about? So yeah, get excited about the opportunity, guys, but then think about the margins and the viability of the business. At some point, investors are going to have to run those calculations, especially in the public markets. And when you do that, the numbers don't
To emphasize your point on the LiDAR, Sterling, I think Anderson from Aurora, he founded Aurora. He was full self-driving, created it at Tesla. His whole thing is, if you listen to him speak, right, he believes there has to be that fusion between the two. And they're obviously already commercially accepted in Texas, where you're at, running, a couple 100-mile trips already commercially with fully autonomous. With some of the biggest, commercial vehicle, PACCAR and some of the others out there. Listening to him speak, he has no skin in the game on autonomous from anything else other than, driving his business. And he's been a big believer that you need to have the, a fusion mentality. And again, cost curves will come down. So at the end of the day, 20 years from now, the cost of LiDAR is going to be, everyone talks about, Waymo spending $150,000 per vehicle. Part of that has to do because they're Jaguars. Part of that is they're trying to make sure it's, 100% safe. Today, based on what they have a $100 billion war chest, so they can fund this thing, to infinity. They print, basically Tesla's cash, every year, in cash flow. So emphasizing.
And Sean, they could sell 10% of Waymo in this market.
Yeah.
And get a $50 billion valuation. I have posts up there on why Google should be actually thinking spinoffs on a proactive basis. And this is one where investors would eat it up. I mean, one of the reasons Tesla's valuation is where it is because people have no other major public ways to invest in this from a retail point of view. And if we gave, and those opportunities presented themselves, which they will, because this is also capital intensive, we're going to see other ways to invest. At some point, these companies are going to say, hey, we got to raise all these billions of dollars. We're telling Wall Street that we have the cash flow, but at some point, Wall Street is going to say, hey guys, why don't you have these guys? It's like, sending my teenager off and saying, go sell some yard signs and make some money for your walking around money. And Waymo's going to have to do it, and these other companies are going to have to do it. And when that happens, guess what? Investors are going to have other options besides Tesla to put their hopes and dreams on robotaxis, on humanoid robots into other companies. And when that happens, the Tesla multiple also compresses. So I just want to point that out. Right now, this is just an easy way to put a couple of Robinhood dollars into Tesla, just to say, oh, I'm invested in robots and the future. But it's not real. It's a meme stock.
Speaking of the fundamentals, right? And given that, if that holds true, that again, the valuation is supported by the story and the next leg higher is going to be, or higher or lower is going to be supported by the story that Musk is able to tell. Do the fundamentals of the actual robotaxi business that you're talking about actually matter? Or is it, I could see a world where if they can just get even a small fleet active and running, that could be the catalyst to just send investors into a frenzy, because you show that incremental progress and then, get this kind of next hype cycle to
It's a great question, Tom. But the thing is, I spent 30 years in my life in public and private markets raising money from institutional investors who are serious people. Okay, they're not going to do this on a lark. What we're comparing apples and oranges. We're comparing retail investors who are very excited about the momentum of this and that, putting in $1,000, $10,000, $5,000 here as part of the thing. Bitcoin's going up, everything's going up, so rah. Versus raising, and Sean knows this. He's a serious investor. He's going to have people in his office and say, we're raising 20 billion, 30 billion, and he's going to have to make a commitment of 4, 5, 10% of his portfolio that's going to be, invested in this stuff on the public side, for a while. So what I'm saying is that, yeah, they need fundamentals. They need analysis. They need real numbers, beyond the back of the envelope stuff we do on, if Tesla's 2 million, 3 million cars are, 20% of them are robotaxis and this and that and the other. There are 20 million vehicles a year in America. I mean, Tesla is nothing compared to this. And by the way, they're losing on the EV side. Their EV sales are down. We haven't even talked about the political baggage on the Tesla cars. They're down 40, 50, 60%. No one's paying attention to that. And by the way, as someone said on the call, Elon is still focused on his political ambitions, and that we got to keep that in mind. This is a man who is very smart, but he's got a lot of agendas, and most of his agendas right now do not fit with the agenda of the Tesla shareholder, which is the only public entity with its own set of fiduciary responsibilities. And by the way, it's still going to have, another 25, 30, $40 billion compensation package for Elon. And he's still doing things like taking Tesla chips and moving them to XAI. He's going to take, billions of dollars from Tesla's cash reserves today to fund XAI data centers. So how do you foot that when you're a Tesla shareholder at an institutional level, where you have to justify to your investors every year why you invested in this versus that? You cannot just invest it as a momentum stock. That's my only point.
You can't short it though. There's one thing that
no, you cannot short it.
And we are entering that time where all he has, he controls communication right now.
Correct.
Number one, he has all these different things he can pull on, tomorrow saying, hey, maybe we're going to combine Tesla and SpaceX. Hey, maybe we're going to do XAI and Tesla. And that would just get things going. Hey, we're launching in this state. And these are all these little things. And, if there's something that he's done incredibly well over time is capital raising. And that's kind of been his...
Maintain the optics. I think that's
exactly.
One thing
he's
been able to do is manage the optics. We've got 10-ish minutes left, so I want to loop Shay back in for a final word on kind of the bull case and just,
talked about, yes.
You're a current shareholder. What are you looking for next week? What are you needing to see in terms of progress before you either, add to your position, or what keeps you excited about this stock despite all of the many headwinds or potential headwinds?
Yeah, so I started building my position Tesla around the 170s. I actually trimmed 25% of it earlier this year. I think this is, if I was a sell side on the street, I'd put it as a hold. It's a wait and see. However, I do think that it's not I kind of share the same sentiment as Sean. It's not you don't buy it, but you don't short it. You just wait and see the vision come to light. Going off, I did want to go back on some of the points that Michael and Sean were talking about as well. For the LiDAR, I think the fusion approach is interesting, but I think that Elon's too far into I don't think he's ever going to go back to the LiDAR system. And I think that he doesn't want to, because his vision is scalability, flexibility, and that data flywheel dominance that I mentioned earlier, what Tesla's trying to solve. LiDAR systems, even if they become cheaper, which I do believe, at any tech revolution, it's going to become cheaper and cheaper the more as time goes on. It's not going to cost, I don't know, is it $70,000 right now for a LiDAR unit? I don't remember, but it's going to be drastically cheaper in 10 years. But I do believe that LiDAR systems are still going to rely on these HD maps where it has to be pre-mapped, so you can't just, you can't just show up to a new city and drive. It's going to have to be everywhere in the world is going to have a map zone, and that's going to be somewhat difficult in my opinion. The way Tesla's vision-based system, what they're trying to solve is you don't need a perfect map. You can drop in a new city and drive. Nowhere close to that. I think right now, what we saw in Austin was just purely the first domino to fall that their approach can work, even if it was 1% of what it should have been. That 1% proved that it's possible. It just needs time. And I think that it's really important for a lot of people, investors, to know that this is not software, it's infrastructure. Every city is going to provide more and more issues. What works in Austin won't work in Denver. What won't work in LA, etc. It's going to be a red tape bureaucracy headache to own. So I think if you're investing in autonomy, know that it's not going to be a 2026 story. It's probably going to be further out. However, for humanoids, I do believe that's an interesting component where, even if, again, that 1%, let's just say 1%, I think they generate, correct me if I'm wrong, $30 trillion in revenue, the physical workforce. They generate a lot of revenue. Even if it's 1%, we're talking $30 billion and up for grabs. And that's something that it's worth the risk. It really is, especially when we have a labor shortage. It's such a win-win for it to work. And I get that maybe it's not there for the general application of humanoids, where you can decide to do something like a human would actually do it. But I think doing something from point A to point B, that's something that's going to be drastic still that they can benefit off of. And I think that for the earnings story, it's not an earnings story. You have to treat it as space, quantum, these futuristic themes where their EV business is dead. And I think it's been the worst kept secret in the world. They're cannibalizing that in order to fulfill their AI software vision. It's not an earnings story. It's probably not what I think Michael referenced this earlier, maybe a couple sentences, but he's going to tailor it back towards what's going to be this futuristic view of what Tesla's becoming, not what it has been. And I think the biggest question is how long is that going to take? And nobody can answer that because it's so early.
Look, he has been a master at selling stories that are 20 years away, promising in 5 years, and making money off it. This is a man who, I will give him full credit, he's made more money on self-driving than any self-driving company, $2 billion. Because why? When I bought or you bought your Tesla, you had to pay $10,000, $12,000 for the EV FSD with the promise that will work someday. He's been collecting that cash. Okay. And just now to your point, Shay, you're right. He's going from one shiny toy, which was the EVs and autonomous driving, to the next shiny toy, which is robotaxis, and the next shiny toy after that, which are humanoid robots. And all of those he's promising. Literally, look at his numbers that come out of his mouth. 1, 2, 3 million robots in the next 3-4 years.
Those
They're
are
going to be 10 to 15 years. No, but it's not just headlines. Okay, they drive the meme stock. They drive the investments. We can't just say headlines. People are buying it, the stock, for $2,000, $5,000 on Robinhood or whatever. They're buying the stock because they say, okay, you know what? They're not going to do the work like we're talking about in the details. They'll say, I'll put a couple of bucks on it. It's no big deal. But the reality is, we can go back. The pattern is there, and the tech, and it's not just me saying this. You can go look at the analysis of the robots.
Michael, quick question.
Yeah.
Quick question.
Yeah.
So, let's just do the sum of parts game. Okay, sum of
God,
parts game. I put $200 billion conservative on energy and automotive. It's $1 trillion. You're seeing Anthropic at $100 billion valuation.
No,
let's just
apples
say
and oranges. Anthropic.
No. Let me finish my part. So, what would you value Dojo where it's at right now by itself?
Zero. Because I'll tell you why. Zero. Dojo is zero because those are ASIC chips. They have no general purpose market. They only work in Teslas. They have zero value. They've had value to Elon and Tesla. There's zero value beyond it. I know the chip business. I spent 15, 20 years looking at the Dojo is zero.
Well, they're not trying to sell it externally. That's why.
It doesn't matter, but it doesn't work beyond his stack. When you look at the way the model works and how you do the technology, the hardware, the software goes into the Teslas, etc., and the robotaxis that he wants to do. Dojo is not. Look at what he's buying. He's hugging Jensen on stage because he wants as many NVIDIA chips as possible.
Okay, so we'll agree to disagree on Dojo, but let's just say humanoids, because I think Figure is getting a $50 billion.
Zero.
But Figure's getting a $50 billion valuation. But it's not the general application robotic angle. It's very low ceiling, high floor.
What I'm saying is we're at the research stage. That cup thing that you're talking about, massive amounts of data has to be generated to teach the robots. That doesn't exist. Cars, Elon could at least point to 2 million Teslas drive around, and the camera data being used to train his models for FSD 12.0, etc. There is zero like that, Shay, for robots, for humanoid robots doing anything. Everything we have in our heads of what the humanoid robots are doing are fictions of our imagination, that they will help us fold clothes. That's
there's definitely a juice. I get there's 100% juice. I think like a great example is Scale AI. Data labeling is going to be a no-brainer in foundation models in 10 years. Everyone's going to have it, but they sold for $15 billion for Talon. That's an example of it's just inflated. But
bringing up the whole Tesla back to humanoids, question for Shay or anybody. Obviously, Tesla's brand has had some deterioration here recently. Humanoids, a Tesla humanoid, how comfortable are people having, a general purpose robot, Tesla branded, inside their house 24/7? If you have
great question, awesome question. Okay, and what I'm trying to get is that alone gives you a sense of how complicated this is. The question that you're raising, Sean, is perfect. And so, Shay, which is how comfortable are humans having fully autonomous things in our home, watching, recording everything? And guess what? Right now, I even turn off ChatGPT, the voice thing, every time I close the application because I don't trust, not that I don't trust OpenAI, but I don't want something on my devices that's constantly being reported somewhere out there. So all these robots, etc., just to finish, if they're going to be to work, they're going to have to do enormous back-end processing. The trust aspect has not been solved here, and that is a big question. So that's a great question that Sean brought up. I think right now we're assuming that we're all just going to be comfortable
around your house.
No, I agree with you what you're saying. I think that XAI, which is essentially existential AI, is always going to be a concern with these things. But I think you're already seeing Tesla trying to solve that with a Kim Kardashian photo shoot. I forgot when that is. I also think that TikTok is a major data violation that nobody cares about. I speak with my fiance something, and 2 hours later it's on my TikTok feed, and that's China.
Yeah, I feel
that's
useful enough. People forget.
They overlook it.
It's like as long as it is
I
doing the
remember my
job
first
that
Uber drive.
yeah.
And you're like, man, I'm with a random person in a random car. And then you migrate to it, but for me, it's more the branding, right? So I think of like Meta actually created really good technology or like hardware products, but the Meta branding and Facebook, like the Facebook portal was actually best in class product when it first came out, but it had the Facebook brand. The question is the Tesla brand tarnished enough with 50% of the population, where they're not going to want to have a Tesla branded anything inside their households. That's just an open question.
No, it's true. I can't buy a Tesla car right now.
This is $400. The Meta's the smart glasses. I've had them. I bought every model, but I don't trust them. I don't wear them except to muck around because when I take pictures, half the time it was going up on Facebook when I told it not to do it, and I don't trust it. So this business of trust is a very, very critical one, and no one has cracked. The closest company we have on trust is Apple, and they're the ones who are the furthest behind. And I think they're furthest behind because they're smart. They know the technologies are not ready. It doesn't mean that Apple doesn't have AI chops and engineers. They've done the work. This is not about technology. This is about how to build the technology so that the trust can be maximized, because ultimately that is what is going to matter to people. And right now, none of that is in the discussion of the kinds of things we're doing today when we talk about human-on robots or self-driving cars, etc. And just think about it. If you have your own Model Y that you're talking about, Sean, or it's being driven around all day. God knows what happened to it during the day.
Oh, I wouldn't put my thing on a fleet, that's for sure. I just wouldn't have a car, and I would call it when I want to.
Yeah.
That would be like my view on that. But I think anyone putting their thing on the fleet, other than for 100% commercial, like.
But that's literally what. But Sean, that is literally what Elon is selling. On the call, Shay, he will be talking about that. He will be talking about, he's been pitching people like me to give him $12,000, which I did once or twice, and I was one of the biggest idiots because I never got anything close to that $12,000 ever. He got my cash.
It's okay. It's pretty good. It's just you have to
it's not pretty good. It's like I'd rather keep teaching my teenage cousins how to drive. It's the same anxiety when I'm in a Tesla, even with a Model 12. It's like I'm like, will this car do what I will do on the left turn, on the right turn? I don't need that stress. Yeah,
every week. Yeah,
but it's
like,
but
too, or Maps.
say again.
No, I'm saying remember they own Waze and they also have Google Maps, which I think.
No, they do,
totally
but I'm just saying those
awesome.
are not as important in the stack that we're talking about. The lidar stuff is about more sensor information that the system can process to navigate the edge cases, because it's really the 5-10% of the edge cases that cause 90% of the problems, the accidents and so on. And that stuff you cannot simulate. And even the stuff that Tesla's 2 million vehicles are, the data it's getting back, that's why the Teslas still keep driving into big trucks with white sides and so on, because that was not the edge case that they trained on. And it wasn't, it didn't know what to do. And the reaction time was wrong. You can watch all the videos, and there are government reports on this now. And by the way, when Elon was in government, he made sure all of those things were taken off the websites. So there's that element as well. How much do you trust all this stuff? Which is the other piece of this. We have to keep that in mind.
I think that's a great place to kind of summarize all this. What I'm getting as kind of the moderator with no dog in this race. You have to trust in the story that he's selling, trust in the technology that'll get there, and then trust that it's going to deliver the value and the economics are going to work. I know we're way over, but I wanted to end with two kind of rapid fire questions. Really
Thanks,
appreciate
Tom.
the discussion. We've got a lot out of this. Two things you can each spend maybe 30 seconds or a minute on. What is the craziest acquisition that Tesla could make, and at what price or valuation would you go all in on Tesla? Or is there a number where you'd say, back up the truck and get in there and buy for yourself? Sean, we'll start with you as the guest.
The second one was the second question was what?
At what price would you go all in on Tesla? Price or valuation?
Yeah, okay. Yeah, and the first one, I think, obviously, if you're thinking of autonomous, you kind of need distribution. Obviously, Tesla can turn on its fleet, but the obvious thing here is, go and acquire Lyft. And you quickly, turn on, a whole fleet of consumers that can access anything you're on there. I think that from a valuation perspective, that's an easy purchase, and you quickly, you bring on, a company that's doing already, I think it's 800,000 or so, ride or million rides a year, something like that. You compare that, you combine that with, Lyft or, Tesla's brand and Lyft's brand. I think, obviously replatform it. Anyways, so I think that could be interesting. Number two is the, valuation, somewhere around, like $400 billion is kind of what we've kind of labeled as an interesting area where I think, you take out some of the optionality air. And now you're kind of like baseline, hey, here's a company that has, best-in-class energy, soup to nuts, vertical. Then you have, a car company. Autonomous, I think they'll have a place in the autonomous landscape. And then, the Optimus and those things, I don't think you should assign too much there today. But at the end of the day, I think that's more of a research lab at this stage, almost like Facebook Reality Labs. But in general, that's kind of like the two things. I think Lyft and, $400 million valuation, or billion, sorry, is, where I think you have more of a margin of safety there relative. But it may never get there, right? So,
yeah, got it.
Still waiting on the semi-truck, so.
Yeah, we all are. Michael Parekh, how about yourself?
I'm going to be, I'll just keep it simple. I'll just use Toyota. The moment Tesla is below Toyota's market cap, which is $220 billion. So it's a little less than, more than half of Sean's number. Because that's the auto business. Everything else is futures. And you've heard me talk about the futures. I think the futures are going to take 5 more years, whether it's robo-taxis or the robots. And so I'm not willing to pay anything for that today. And there's so much competition. There's no advantage to a vertical stack for anybody because it's a global market. It's wide open. China's in it. Everyone's in it. So you do not have a first mover advantage in that space. So for all those reasons, Tesla is not interesting to me until, under 250.
Got it.
Billion.
And then Shay, to close us out, acquisition and price that you'd go all in.
No, I mean, Sean took mine. I think Lyft is going to get acquired. It's depending on who's going to acquire them. It's the easiest quality fleet that you can just acquire. If I had to do some other answers, something on powering chips to help with the power constraint issue that's going to happen across Optimus and Dojo eventually. Price, I think 150. 50 and 1 to 180 has always been a great accumulation range. I think at 150, what's that valuation? Like half a bill. Yeah. I think it's a great risk and reward. Still a premium on just the EV and energy business, but I think the Optimus and Humanoid and Dojo, all those similar parts was around $200 to $250 billion. I think that's a good risk and rewards. I think go there. I don't think it'll get there. Don't get me wrong, guys. I don't think it'll get there. I think worst case, we're in a prolonged digestion period if the market holds up and it just won't go anywhere for probably a couple more years. But yeah, that's kind of my answer to your questions, Tom.
All right.
And
awesome,
on the business of not getting there, look, everything is, fundamentals don't matter until they do. And I remember, being in the internet cycle, running Goldman's internet operation from the 90s to 2000. When everyone was so in on internet, just like everyone is so in on AI and robotaxis and robots today. But when the light switch flips, it flips. It's binary. And I'll tell you, in 2001, 2002, 3, 4, 5, you couldn't sell internet to save your life. Those were the best times to invest. My best part of my career after the crash. And we will see that with AI as well. Maybe once, probably 2 or 3 times.
It's tricky because we're going to see a productivity boom that's going to cause a GDP bump.
Another conversation. Yes, I'm a huge believer in productivity bump, but I think it will take longer. I did the analysis on this. Productivity bumps take again longer than the technology. It's a right. I agree with it. I've had huge discussions with economists on this, and we can do a separate show on it. It's a great topic, but I don't think it will happen in the next 2 to 3 years, which is what we're talking about. Thank you.
All right, awesome, guys. Well, this has been a huge value for everybody. I've learned a lot as kind of the independent person here. So, Sean, appreciate you hopping in and joining us. Stocktwits community really appreciates your insights. You can find Sean on Twitter and LinkedIn, a couple other places. And we'll have have him back on soon. Tesla earnings next Wednesday. Keep an eye out after the bell. We'll see what the story and the trust factor is. But for now, we'll leave it there, and we'll catch everyone back here tomorrow for your normal daily rip.
Tom,
Daily
thank
Rip
you.
Live.
Shay, thank you.
Appreciate it,
Sean,
guys.
this was awesome. A lot of fun, and I hope it was entertaining.
Definitely.
I enjoyed it, man. I think we all had decent perspective, so good stuff.
Thanks,
Tomorrow.
everybody.